All right, y'all. In this session, we're going to be talking about my scalping strategy. And what we want to do now is we want to take everything that we've learned throughout this entire course and we want to tie it all together and we want to put it into a step-by-step process that you can use in order to approach the charts every day. Because it's one thing to know how to do technical analysis, but it's another thing to know how to approach a chart every day, sit down, do your top-down analysis, come up with a trading plan, come up with your own levels, and then determine what you are going to look for on Market Cipher before you enter a trade. And we're going to be talking about trading ranges, and this is split up into two sections. We're going to be dealing with swing trading, and we're going to be dealing with scalping/day trading. Now, if you've been following the course, you've already seen me do some of my VIP live streams that I do every week in the Patreon Discord. You've seen me go through my top-down analysis and find those juicy levels, but what I'm going to do today is I'm going to be focusing more on scalping and day trading, and I'm going to be walking you through the process that I go over every single day. Now, this deals with the routine that we need to establish for ourselves every day. It's very, very important when you are a trader, especially if you're a scalper. If you're a swing trader, it's also true you need to have a routine, but you don't have to do it every day. You might only have to do it once a week or twice a week when you come to the charts. But if you want to be a scalper, if you have maybe 2 days a week, maybe you trade on the weekends every day, Saturday and Sunday, and you need to have a routine for those days so that you are prepared for that trading day, so that you are prepared for the potential trade setups that could happen. Okay, so we're going to go over the routine you need to have doing your daily TA, whether you're a night trader, a day trader, a weekend trader, a weekday trader. We're going to be talking about identifying ranges and getting those key levels of confluence. We're going to be going over making a plan. We're going to talk about how to enter the trade, whether we use a limit order or a market order. We're going to talk about how and when to take profit. We're going to talk about stop losses and risk management. We're going to talk about the mindset. And then we're actually going to talk about the trading strategies that I recommend for actually getting into the trades. So this is going to be a comprehensive package right here when it comes to scalping or day trading. Now, something that's very important about price action when you come to the charts is a lot of people approach the charts and they want to look for these massive moves like this massive pump we just had on Ethereum or this massive dump. And yes, there are going to be many times where you do get those types of trades. But I want you to notice something about this chart, okay? Most of the time, and this is an Ethereum chart, most of the time Ethereum is trading sideways. It's ranging from a high to a low, and it goes from high to low and high to low. And when we are scalping, when we are day trading, what we want to do is we want to be able to identify these ranges, because these ranges are going to be money-making machines for us. Because if we can identify a high and a low from which price inevitably will pivot, then we have a framework from which we can look for these really good trade entries. Okay, now notice something. Ethereum is ranging here, right, before it breaks out to the next range. And then after it breaks out and we have this massive move up, we're ranging again. And now we have a massive move up, and it's only a matter of time before we range again. Right here as well, we were ranging for a while in this range. Okay, down here, look at this. Ranging, right? The reason I'm beating this to a pulp about the ranges is because it's going to be very, very advantageous to us. Because most of the time, if we come to the charts understanding that the way price action moves is we get a very large impulse and then a range, right? We can then be more prepared for what is going to happen. Look at this. We have a really nice range that lasts from August 8th all the way to the 29th of August. We could have come to this chart every day, pretty much all of August, and just scalped and day traded with all this nice volatility within a range. And then maybe we would have caught this really nice trade. That would have been nice. But if we don't, it doesn't really matter because then we come up here and we're ranging again. So the reason I am literally, like I said, beating this to a pulp with, talking about ranges is because this is the first thing that we need to understand. This is the first thing that we need to have established in our minds when we come to the chart, is that oftentimes the price is going to be ranging. And if we're going to be day trading or scalping, this is the framework from which we are going to be trading. Even if there is a massive move like this, okay, we are still going to be trading in the range. Let me show you what I mean by that. This morning, okay, in the VIP Patreon Discord, in the Bitcoin potential scalp trades, I saw this setup, okay? I saw this setup for a scalp long. I wanted to long from the confluence here between the value area low of the range and a golden pocket with the bullish divergences on Market Cipher B. And I wanted to long it up to the daily open, which also so happened to be the value area high of the local range. Now, I didn't know when that trade setup got hit, and by the way, they front ran it. I didn't actually get in the trade, but a lot of people did, so shout out to everyone who got in the trade. It's always good sometimes to set your limit orders a little bit higher than the actual level, just in case we front run it like this. I didn't know that this was going to be the move that would break Bitcoin out into the all-time high. What I was doing was simply trading the local range, and it just so happened, okay, that long position was this right here. That was this move, I'm pretty sure, 63520. Let's see. 63834 is where I wanted to long it from. So that would have been this long right here. So do you guys see that? We've been trading in the range all this time, and I've been scalping this range, right? And then again, I just wanted to enter another scalp, and it just so happens that that scalp that I entered blasted us off all the way to the Bitcoin all-time high. And so, which was $67,000. So what started out as being a little scalp ended up being, a nice 5% move. And so the reason I'm telling you this is because instead of focusing on trying to get those massive moves, we should always focus on trading the range. And when the range breaks out, ideally we would have already gotten into the long or the short at the low or the high of the range. Okay, so what is our routine going to be when it comes to scalping and day trading? Well, we need to come to the charts every day, these blank charts, and we need to have a process in which we do technical analysis to find those key levels. Again, when I come to the Bitcoin chart here, why am I looking to enter a long here? It's not because of, I feel like the price is going to go up. It's because I saw that there was confluence here. I saw that we had a value area low and a golden pocket in one place. And when you find confluence of multiple areas of support and resistance, you say, okay, I'm interested in taking a trade from here if I get my confirmations on Market Cipher. Okay, so what I want to do is I kind of want to reverse engineer some scalping that I did yesterday, because yesterday I was scalping Ethereum all day, and it was a very, very profitable day for me. So every morning what I do, this is my routine, every morning. Every morning I have my macro levels. These are my swing trading levels where I'm looking for swing trade entries. And this is a chart that I will do like once a week, okay? Once a week, I will have my macro levels for Ethereum. These are actually all the zones of support that I'm looking to take along if Ethereum comes down to them, right? These are the areas of confluence where if we lose this level without bullish confirmations, I'll look to take along here to see if we get bullish confirmations here. If we don't, I'll look for here. If we see bullish confirmations on Market Cipher, I'll look to get in the swing trade here, etc., etc. And I do that once a week, but every single day I will come to the charts and do that on a very small section of price action, okay? And yesterday, this was the chart that I had marked up. Now, what I want to do is I want to show you what actually I was doing here. This was 12 o'clock p.m. my time on October 19th. It was 8 o'clock in the morning, I should say, on October 19th. And what I'm doing here is I'm looking for a local range. That's the first thing I'm doing when I come to the charts, is I'm looking for a local range. So let's come back to the Ethereum chart here. And, if we go back in time a little bit to where I actually was, we can actually do that in replay mode. So we were trading at about 38.15 at about 8 a.m. on October 19th. So October 19th, about 8 a.m. We're like right in here, okay? So I'm going to go back in time and just show you guys the process that I literally went through in order to get literal trades that I that I took. I took these literal trades and I made money doing this. So that's why I'm going to go back in time, because this is not hypothetical. This is something that I actually did in the moment. That's why I'm going back in time, because we can see here, this is the chart that I marked up. And the reason I marked it up this way is I didn't do this in hindsight. I did this in real time. And so the first thing you're going to do is you're going to try and identify a range, okay? Now for me, a very clear range is, as I'm looking at this price action, I see very clearly here that we have a level, just using my eye, where it was a resistance. It was a clear resistance, and then it got flipped into support. And so I would say this is the low of the range. And then I could see kind of up here that this would be the high of the range. And you're going to start just by getting a general low and high. Okay, very unspecific, but just generally a low and a high. And, you know, you're going to do it with your eye. And then the second thing you're going to do is you're going to pull out a fixed range. Okay, you're going to come over here to the left. You're going to pull out the fixed range volume tool. And you're just going to pull all the price action that you have in your range. And this is now going to give you a volume profile where you have a value area. Now, what's so great about this value area is the fact that this is giving you a fair value for the price of Ethereum during this range of price action. Okay, now I know I've gone over this in the volume section, but we have our value area high, we have our value area low, and we have our point of control in the middle. And the reason why this is so important is because what this is doing is this is telling us that the fair price for Ethereum locally should be somewhere within these shaded candles. If we deviate outside of the value area, it's very likely that we fall back into the value area. Look what happens. We come out of the value area, fall back in. We come out of the value area, we fall back in. We come out of the value area, we fall back in. We come out of the value area down below, and we come back up in. Right? We come out of the value area, we fall back down in. We come out of the value area, we come back in. Right? Now, what that means is, in general, we should be looking for shorts up above the value area, and we should be looking for longs down below the value area. Right? So if we are down below the value area, we should be looking for other levels, maybe a daily level, maybe a weekly level, maybe a 4-hour level, maybe a Fibonacci golden pocket. Any kind of level of support that we can find down below that value area, we should be very interested in longing that, because we know there's a very high probability that if we fall below the value area, that we are going to come back up into it, right? And so that should be our mindset when we're scalping. When we come above the value area, there's a very high probability that we fall back down into it. So we should be looking for shorts at the highs and longs at the lows. We should not be looking to trade the breakouts. We should not be looking to trade the breakout of resistance. If you are a scalper or a day trader, you do not want to trade the breakout. If you're a swing trader, that's a different story. We're going to be talking about trading breakouts in swing trading, which can be done, especially falling wedges, okay, or triangles. That absolutely can be done. But when you're scalping, when you're day trading, you will find that the old adage of buy low and sell high is true. We want to buy low and we want to sell high. If you sell high, instead of trying to long the breakout, right? Look what happens. You make lots of money. If you buy low, instead of trying to short the breakdown of the support, well, what happens? You make a lot of money, okay? So the first thing you're going to do is you're going to get the general outline of your range, and then you're going to pull your volume profile. And then what you're going to do is you're going to check from your top-down analysis and see, okay, do I have any large-term time frames on my chart here? Like, we're going to check and see if we have any larger-term time frames on our chart. So I'm going to go ahead and turn on my daily levels and see, do I have any daily levels here? Well, what do you know? I do. I have a daily level right here. And so I might just simply put, because when I'm doing my scalping technical analysis, I will keep it in a folder. I will keep all these levels in a folder, and I will name that folder local, and I'll give it the date. So let's say today is October 56th, right? Today's October 56th, and so I make a folder called local October 56th, and I'll put all my levels for the day in that folder, so I can very easily turn it on and off and then delete it for the next day, or change it or edit it or whatever. And so if I turn on my high term timeframes and I see we have a daily here, I'll just go ahead and add another daily. And I see we have one down here, so I'll go ahead and add this daily. And then I'll move those dailies into my scalping folder here. Okay. Move those dailies into my scalping folder, and I'll go ahead and turn off my daily folder. Now I'll go turn on my weekly, and I can see that, wow, look at this. Not only do we have a weekly, but this daily here, if I turn on my weekly, the daily is also a weekly, and we have a weekly up here. So I'll go ahead and mark this weekly. I'm going to go ahead and make sure I know that this daily here is also a weekly. Okay, something else that I like to do is I will go into, I like to use ExoCharts, okay? And in ExoCharts, you can find the previous day value area low, the previous day value area high, the daily open, okay? I am creating a course that deals specifically with ExoCharts, but there are ways to get this information on TradingView. But what I like to do is I like to get the previous day value area high, the previous day point of control, the previous day value area low, and the daily open. Okay, and the daily open. So these are important levels as well that I will put on my chart to find confluence. The daily open, the previous day value area high, the previous day point of control, and the previous day value area low. These are levels I will also put on my chart in order to find confluence. Okay. So I can't really do that right now, but you can see if we go to the Discord that I did have the previous day value area high. I had the daily open right here, which lined up perfectly with the value area low and the previous day point of control. Okay, 37.50. So I can actually, on this chart, we know that this was the previous day point of control, and it was the previous day, and it was the daily open. Okay, the daily open is a really, that's the price that Ethereum started trading at, that daily candlestick, right? So it tends to act as a support or resistance. And so we want to put all these levels on our chart because the goal here is to find as much confluence as possible. So once we have these levels here, you can see we're starting to get some nice areas of support and resistance, right? Now what we want to do is we want to start to pull out some fibs. We want to start to pull out some fibs. And we'll pull some fibs maybe from a swing low to a swing high. So really, I even will pull them, all the way from down here, from the swing low to the swing high. And usually when I'm scalping, I just usually use the golden pocket. Sometimes I'll put on the 786, but I find really that the golden pocket is the best. What I'll usually do is I'll keep the golden pocket on only, and then I'll come over here and I'll turn on the 786 and see, is there any confluence with the 786, turn on the 382. Is there any confluence with the 382? Now, if there is confluence with the 382, but we've already hit that 382, then I just turn it off, right? Because we could see that the 382 was a level, but we came down to it and we did get a little bounce off of it, and it didn't really act too much of a level. So I'll just turn that off, okay? And then I'm going to, just for the sake of this chart, I'm going to turn off the trend line and the zeros and the ones. And then I could pull another fib from down here to the all-time high and see, is there any reason why I would want this on the chart? Well, we can see what's interesting here is even though we've already hit this golden pocket and we've fallen through it, we can see that it lines up perfectly right now with our value area low, our previous day point of control, and our daily open, right? And so maybe I would want to keep that on the chart because I'm looking for areas of confluence, okay? So we come over here to the chart right here, and we can see that I did have a golden pocket here. But before we pull those macro golden pockets, I like to pull smaller golden pockets. So I'll take one from this swing low to this swing high up here, and maybe from this swing low to this swing high, the most recent, right? And we can see that we do have some nice confluence in these areas. Like there's golden pockets right around this value area low, previous day point of control, and daily open. So what that means is I am getting very interested in trading this level, right? I'm very interested in trading this level right here, okay? Because I see that there's a lot of confluence right here. And then what I'm going to do is I'm going to pull fibs from the swing highs to the swing lows to try and find resistances. So, this would be the first one. We've already hit all those fib levels. Let's see, we've got this one. We've already hit that too. And now let's pull this one. We've already hit that. I'm just looking for areas of confluence, okay? Now, this fib that I had pulled right here, we can see came right in along the daily level, right? It was a daily and a weekly level. And so I'm trying to remember how I pulled that fib. Oh, it was right here, okay? It was right here. We had a golden pocket coming in right on a daily and a weekly level. And if we look real close, we can see we never actually hit that daily or weekly level. So we're starting to find areas of confluence where we're looking for trades, right? Remember, we want to take shorts at the top, at the highs, and we want to take longs at the lows. So if we find an area of confluence at the high, that's an area where we get interested in. If we find an area of confluence at the low, that's an area that we get interested in. And there's something else here that I like to trade, which is called the chickens drinking water trading strategy. Now, I'm going to make a video specifically on that. I'm going to go over a little bit in this video. But basically, what I do when I'm marking up the levels that I want to trade, right? You can see I had 4 levels here. The 4 levels were, I had this golden pocket right down here. No, I'm sorry. It was probably this golden pocket right here, 36.27. Let's just make sure. Yep, 36.27. It was this golden pocket right here at about 37.50. Yep, 37.50. And then it was this golden pocket up here around 38.48. Yep, 38.48. And then I have this right here. These are the circled areas that I wanted to trade, where I see that we have CDW. That means what a CDW is a wick, right? It's a wick that is a previous high. And there's something called a swing failure pattern. A swing failure pattern is where it looks like we're going to get a breakout. Also, I did have on the chart a, I need to put here that I had a, sorry, let me get the ray. We had this, this trend line right here as well. I think it was something like that. It's always hard to duplicate, but we had that trend line here as well. Okay, now what I like to do on a chart is I like to mark the wicks, okay, and I label them as chickens drinking water. So I would put one here as well. What a chickens drinking water is basically a fake out. It's a fake out where it looks like price is about to take out a previous high, and then it just dumps. Do you ever notice a lot of times there's a fake out where price pumps, and it like makes a new higher high, and then all of a sudden, boom, we drop down? That's called a chickens drinking water setup, also known as a swing failure pattern. Okay, now I'm going to go over how to trade those, but some of the levels that I mark on my chart are also these wicks. Okay, so we can go to the chart that I did earlier in the Discord, and we can see that I marked this wick up here at about 38.90, and I called it a CDW, chickens drinking water, at about 38.90. So that was the one I marked right about here. And these, obviously each one of these wicks could be CDW, but, this one specifically here is the closest one that we have. And what we would be looking for is we'd be looking for price to pump up above it with a bearish divergence on market cipher B. And when you see that bearish divergence, it means we're going to not actually break out and price comes down, right? If we're breaking out and market cipher B is giving us higher highs and higher lows on the momentum, then we can be pretty confident that we are indeed going to break out. But if market cipher B is giving us bearish divergences, then it means we're probably not going to break out. It means we're probably going to dump from there. So these are the levels that I'm looking to trade. And again, this is just, I'm coming up with my plan for the day. Okay? So my plan for the day is I'm early in the morning. This is basically my trading journal in the Discord. These are the 4 areas I will trade if we get divergences as we come to those levels. These are the juiciest levels to trade in my opinion. These are 4 potential trades right here. Okay? Circled them. And the reason why these are the juiciest levels is because these are the areas with the most confluence in our horizontal range. Okay? So interesting that Bitcoin is coming down. I'm actually looking to take a long potentially on Bitcoin from this retest of the all-time high and this golden pocket right here. So I'm actually going to move this down just so that I know if we're getting close to the VWAP. Because I'll just be curious to see. Are we getting bullish divergences right now? Yeah, we are. Okay. So, essentially, now that we have our plan, and I planned it out in the Discord, now what we can do is we can relax, right? We can just relax. We don't have to FOMO trade. We don't have to do anything. We just wait for price to get to our level. We wait for price to get to our level. That's all we do, is we wait for price to get to our level. So we've done our daily analysis. We've come to the chart. We've marked out our range. We've marked out areas of confluence. We've pulled our fibs. We've looked at our higher term time frame levels, right? We we've made a plan, which is, we're only going to take a trade if price happens to get to one of these levels, right? This is very important when it comes to scalping. We're only going to take a trade if price comes to one of these levels. If price does not come to one of these levels, we're not going to take a trade. Now let's talk about entering the trades. We're going to talk about whether or not to limit or market. We're going to talk about taking profit. We're going to talk about stop loss, risk management, mindset. Now, here's the mindset. Let's start with the mindset. The mindset that we must have when we are trading is after we make our plan, we need to tell ourselves, I'm going to relax. I am not going to FOMO. I am not going to trade on emotions. Instead, what I am going to do is I'm going to wait patiently until price gets to one of my levels that I plan to trade, and I am not going to take a trade unless price comes to one of my levels. The mindset that a scalper needs to have is that we are in this for the long term to make money. We are not here to catch every wave, every little ounce of volatility that happens so we can boast to our friends and say, look at these awesome gains that I made. No. That's not what we're here for. We're here to enter the highest probability trade setups only if we get our confirmations. So now that you have your plan, you can relax. I meet so many people who are glued to the chart 24/7 because they can't relax. They're always FOMO trading. They can't walk away because they don't have a plan and they're flopping and groping, right? You'll notice a lot of people when price starts to pump, they're like, ooh, let me hop on this pump and take a little long scalp. They take a little long scalp, price starts to dump. Price is dumping, they're like, ooh, price is dumping. Let me hop on and get in a little nice short scalp, right? They get in, price comes down a little bit more, boom, it pumps up. They're totally flopping and groping. They have no plan, they have no direction. Now that we have a plan and a direction, we need to remember that we can relax now, and we only take a trade if price comes to our levels and if our confirmations are met. That needs to be the mindset. Okay, we need to remember that there's always going to be another trade. The markets are always going to be here tomorrow and the next day and the next day and the next day and the next day. If you don't happen to get into a trade today, that is fine. It's better to be in no trade than to be flopping and groping, or be in a gamble trade, or be in a trade that you didn't plan out. Okay? Maybe you do your analysis for the day, right? And there was a level that you missed and price bounced off of it and it would have been a really nice long. Oh well. Oh well. You have to get into that mindset of, because I'm in this to make money over time and not get rich overnight, but to consistently make money over time, I am going to have a plan, stick to my plan, and I'm not going to FOMO. and I'm not going to worry about it, and I'm not going to be paranoid. I'm not going to give up spending time with my family. I'm not going to give up spending time with my kids. I'm not going to give up my responsibilities over this trading stuff because I actually have a plan. And this applies to day trading and swing trading. But specifically for day trading, right? Let's say you only trade from 8 a.m. to 5 p.m. on weekdays. Well, if it's 5 p.m. and none of your trade setups got hit, what? Oh well. Go eat dinner. Go spend time with your kids. Go hang out with your wife. Go do something that you enjoy. Enjoy life. The markets will be here tomorrow. You'll be able to pull out your levels tomorrow. You'll be able to have a new plan tomorrow. Okay? Some days you'll get 3, 4, 5, 6 trades. Some days you'll get 0. That's just the way it's going to be. And that has to be your mindset going into this. Okay? So now that we have our plan, now that we've identified our levels, now that we've done our daily routine, how do we know whether or not to limit or market into a trade? Now, I actually took all these trades. I took them all. These 3 trades, because this one never actually got triggered. So I'm going to close out replay mode here. And we can see that all of these trades got triggered. Okay? So the first trade that actually did get triggered was a short off of the golden pocket /day/weekly level. Now, there's a few different strategies we have to enter, okay? The first one is divergence sweep, okay? This is the easiest strategy to trade, a divergence sweep. This is where we see confirmations on multiple time frames. Multiple time frames are telling us this is going to be a good trade. So we're going to start with divergence sweep strategy, then we're going to go into the ninja strategy, then we're going to talk about chickens drinking water strategy, but know this. The divergence sweep strategy, you're going to do a limit order. A ninja, you're going to do either a limit order or a market order, and a chickens drinking water, you're always going to enter with a market order. Okay? Now, what is a divergence sweep strategy? A divergence sweep, and I have other videos in the course that go over this, but in a scalping context, a divergence sweep is when multiple time frames are showing you the same confirmations. So price comes up to our exact level right here. Okay, because remember when I started to do my TA, we were trading down here. This was scalp number 1 I wanted to take. We come to the 1 hour time frame. We go to market cipher B. What do we see? We see a bearish divergence as price is coming right to our level. Okay, actually we don't see it on the 1 hour time frame. Hang on. Now I'm flopping and groping here on my own course. Here we go. On the 48-minute time frame. I thought it was also on the 1 hour. Let me go back to the 1 hour. Yeah, it is on the 1 hour. I'm sorry. On the 1 hour time frame, what do we see as we're coming right to our level? We see a bearish divergence. Now, I'm sure you know this already going through the course, but a divergence is where price and momentum are doing the opposite thing. When momentum is making a lower high and price is making a higher high, that is called a divergence. Okay, and what it means is there's an imbalance. It means that Ethereum is trading at an overvalued price. Remember the context of this scalping is we're doing it in this value area, right? And what this is telling us is that Ethereum not only is it coming to the upper extremity of the value area, but it is also, according to Market Cipher B, getting overbought, meaning it's trading at a price that's too high. It needs to have a correction to come back to a more fair value, probably somewhere around the point of control. And this is telling us that even though the price is going up, getting higher, the market is actually taking money out of Ethereum. The market is actually selling Ethereum, and the price pumping is happening almost falsely. You can say it's a false pump. It's not a real pump. There's no buying pressure behind it. In fact, there's selling pressure. So even though the price is getting higher, people are selling their Ethereum, and there's going to be a correction. Okay? Because price is getting higher, but Market Cipher B is telling us momentum is getting lower. Money is leaving the asset. The VWAP is making lower highs. And what we're going to do as price is coming to our level, right? In this 1 hour candle where price is pumping, our job is to, first of all, we need to know what is happening. So what I like to do is I like to set an alert. Maybe like somewhere right here. I will set an alert and I'll right click that. I'll add an alert and I'll do it once per bar and I say ETH almost at scalp short. And what I'll do is I'll create that alert. I'll take it, I'll lock it, I'll hide it, and I'll put it in a folder called alerts. That way I don't have to see it on my chart. I don't have to see it on my chart, but it's there. So as the price is pumping up, I can do whatever I want. You know, I could be eating a sandwich. I could be out taking care of the chickens. I could be with my wife. All of a sudden, get the alert. Right? Get my alert. And now I go to the chart. And now what I'm doing is I'm looking at these time frames to see, okay, what is happening? Bearish divergence on the 1 hour, bearish divergence on the 48 minute, bearish divergence on the 24 minute. As price is coming up to my level, right? I can see these divergences forming on the 12 minute. I see these divergences forming on the 12 minute. Now on the 12 minute, we can start to see money flow is actually coming down as we're reaching our level, okay? We go to the 6 minute time frame. Money flow as we're touching our level is starting to come down, right? We can see by connecting the previous high to the current high that we're about to make, we can see money flow coming down. We can see momentum coming down, right? We come down even to the 1 minute time frame. And what we see on the 1 minute time frame is as price is literally piercing right up into our level, right? We see a bearish divergence on the 1 minute time frame very locally. What we are doing is we are getting confirmation across multiple time frames that there is going to be a correction. If you see this, and this is called the divergence suite strategy, because we have divergences on the 1 hour and down. Now, it doesn't have to just be the 1 hour and down. This strategy can work even if it's only the 24 minute and down, okay? If it's anything less than the 24 minute and down, that's what I call a ninja entry. A ninja entry is when we're dealing with divergences only on maybe the 6 minute and down, which still can work. But what this does, as we are watching our divergences form, is we can now set a limit order, okay? We can set a limit order in the golden pocket. Now, I only risk 1% of my trading account, and we're going to get into how to do that later in this session, but I only risk 1% of my trading account per trade. So what I will do is I will probably put my limit order somewhere like right in here. I'll either do one limit order right here, or I'll take my position size and split it up into maybe 2 or 3 limit orders, right? Like this. And what happens is, now that price comes up, my orders get filled. Yeah, I'm in drawdown for a little bit, but I trust my indicators, and then we drop, okay? Now, this is very important because the limit order, especially for a scalp, will actually start you off the trade in a little profit, because if you mark it into a scalp, you will have to pay a 0.025% fee, which, if the move is very, very small, will actually take away from your profits. You actually will close a winning trade in a loss because the fees will outweigh your actual gains. It's pretty crazy, but it's true, right? So what we have to now do is, if we see, as we're pumping up to our level, if we see that the divergences are indeed forming on the higher time frames and on the lower time frames, if we see money flow coming down, right, and we see our confirmations forming, right? Because remember, when we're shorting this, the 3 minute divergence is not confirmed, right? It's not. We can only see it printing. It's not confirmed. So we see these things confirming, and so yeah, we have to front run it a little bit. That's part of scalping, right? You have to be very fast. And so we're setting our limit orders very fast on our phone. Usually I do it from my phone while I'm watching the price move, okay? And then what I do is immediately, as soon as my trade is filled, okay, when I limit in, we immediately need to start thinking about taking profits and stop losses. So here's what I do. When I am in a scalp, I immediately look for previous levels of support and resistance, right? And I will set a limit order there. Now, right here for the scalp, I would say that right here, we can see very clearly there's a level of support and resistance that seems to be respected. So I might set a limit order literally right here and take 25% of my position out of the trade. And then I'll have another limit order set right here. And then I'll have another limit order set right here. Why limit order set here for take profits? Because these are previous areas of support and resistance, and we can expect price to find a sticking point there. And indeed, price does find a sticking point in all 3 of those areas. I mean, it's just very obvious, but we need to be quick on our feet when we see that this is a very clear support, resistance, support, resistance, you know? And then this right here, this point of control, obviously it's the point of control. Resistance, support, trading sideways on it, support. We want to set a limit order here. Now, what I like to do for these scalps is I like to take maybe 25% out of my trade early, maybe another 10-15% out, maybe another 10-15% out, and then I like to let the rest run. Now, as soon as I take that first take profit, I will move my stop loss to my entry, okay? This is how I scalp. So if I entered here, right, as soon as we come down to this take profit, I will then move the stop loss to the entry. What this will do is it will guarantee that even now if I get stopped out, it will at least be a break even, possibly a small win. Step number 1 is do not lose money. When you are scalping, you are exposing yourself to risk in the market very often. We're taking lots of trades throughout the day, sometimes 5-6 trades. If we rack up 5 or 6 small losses, that will add up. If we can have maybe 2 break-evens and 4 wins, that's much better than having 2 losses and 4 wins. Right? Step number 1 is not losing money. We know this is a high probability setup because we got our confirmations, but we don't want to lose money. And so after we take that first take profit, we need to move that stop loss to the entry. Now, a lot of people hate doing this. A lot of people actually hate doing this because they're like, well, I'm going to reduce my position size, and then I'm not going to be able to make as much money when we come down to the next levels of support, right? Those people don't have the right mindset. Remember, the mindset is we're doing this to make money over time, right? We're not doing this to get rich overnight. We're doing this to make money over time. I would rather be in a winning trade with a smaller position size than I would be in a losing trade. And we need to get into the mindset of protecting our capital. Protecting our capital is number 1. If we are not losing money, we're a step ahead of most traders. 95% of traders lose money doing this. So if we can just keep ourselves from losing, now we're ahead of the 95%, right? Now we're in the 5%. Okay, we're in that coveted 5% that at least is breaking even. Now we just need to take it to the next level to become profitable, right? So when we enter the short, we hit our first take profit, we move the stop loss to the entry, we hit our second take profit, we hit our third take profit. Now price starts to come up from here, right? What I like to do, if I see clearly that price is coming up, I will close the trade somewhere. Maybe in fact yesterday I think I closed the trade in here somewhere as I saw that we were coming up to the next level. Okay, now keep in mind I was short and then I entered a long down here while keeping the short open, because that's another thing that's good about trading little ranges is if you can get yourself in a short from up here and a long from down here, well, you can keep both of those trades open and you can be in a very advantageous situation. Because you could have yourself in a long from down here, right? Take profit 1 was here. You could be in a short from up here. Take profit 1 was here. Both the stop losses are at your entry, right? So your stop loss is here. Your stop loss is here. You've already guaranteed both of these trades are going to close with more money in your account than what you started with, right? That's a 100% guarantee that the trades are going to close with more money than what you started with in your account because you have taken profit, because your stop loss is a little bit above your entry or at your entry. There's no way you can lose right now. So what this does is, let's say that it's the end of the day, you have your open trades, you've locked them in. This is what I mean by locking in my profits, right? There's no way I could lose. I've taken out 25%, 50%, stop loss is at the entry or a little bit above my entry. Even if I get stopped out, it's a winning trade. So if you're in a long and a short at the same time, it's basically if we're trading a sideways channel and a sideways range and then the range breaks out like it does up here, right? Well, now this long trade that I'm in is still open and it's still in massive profits right now. In fact, I am still long on Ethereum right now because of this long down here, right? I never closed it out, but I did close out this short. As I saw that I was about to get stopped out, I'm like, let me close it out with a bit more profit first. Okay? So that is the strategy for the divergence sweep strategy. Again, what did we do? We did our daily TA. We identified a range. We got our key levels. We made a plan to only trade certain areas. We, based on our divergence suite, decided to limit in. We took profit early. We had the right mindset. Now let's talk about a ninja entry. A ninja entry will be when there's not as much confirmation on the higher time frames, but the lower time frames are still clearly telling you it's okay to enter the trade. Now keep in mind, we don't ever want to enter a trade just based on a divergence on market cipher B. What we do want to do is we want to enter, if we're getting a divergence on market cipher B, along with price coming to a very significant level. Okay, that's very, very, very important. Price needs to come to a significant level. And so as price is dumping here, coming down to the golden pocket / value area low / previous day point of control / daily open, which was one of the areas that I wanted to trade right here, golden pocket, VAL, daily open, previous day point of control, right? Again, this is an area that we wanted to trade earlier in that morning, right? We came up with our plan. What we're doing now is we're looking, as price is dumping, we're going to the 12-minute time frame. We're like, do we see anything on the 12-minute time frame that would make us want to take it long here? Well, yes, we do. We can actually see that as we are coming down to our level, we can see that the momentum is getting higher, and even as we're dumping here, we can see this wave forming higher than the previous wave, right? It's not confirmed yet. There's no dot yet. There's no green dot yet, but we can see it happening. And what we want to do, especially when we're looking at multiple time frames, is if we see, for example, a divergence on the 1 hour, which we did see for our first short, right? For our first short, we saw the divergence on the 1 hour. We don't know if this divergence is actually going to confirm or not, right? Because at the time, we see a green dot on the 1 hour, which could make some people scared to short. But we have to understand the context is, even though we see a green dot, that momentum wave is lower than the first one. And so what we're going to do is we're going to say to ourselves, it looks like a divergence could print here. It looks like a divergence absolutely could print here. As long as this momentum wave doesn't come up higher than the first one, like this, a divergence could print here. And so in order to confirm our hypothesis that a divergence may be printing right here, what we're going to do is go down to the lower time frames and just confirm, yes, a divergence is absolutely printing here. Look at the 24-minute. There's no doubt. Look at the 6-minute, right? There's absolutely no doubt on the 6-minute, right? No doubt. We see clear money flow momentum coming down. We're looking at the lower time frames to confirm what we see on the higher time frames. And so when it comes to a ninja entry, where we're only looking at the lower time frames, if we go to the hour time frame, we don't see, when we come down to this golden pocket, we don't see anything telling us to long. All we see is a red dot printing on the 1 hour, right? We see no kind of bullishness here at all on the 1 hour. So we're like, okay, I don't see anything on the 1 hour. Maybe I need to zoom in a little bit because I had a plan to trade here, and if I see my confirmations, I'm going to enter. So maybe we go down to the 12-minute. Now, the 12-minute is telling us clearly, as we're dumping down, price is making lower lows, and momentum is making higher lows, right? We can see very clearly, as price is coming down, we're getting our divergence. We go to the 6-minute, what do we see? Same thing. Very clearly, as price is coming directly to our area of support, we can see that we are getting a bullish divergence on market cipher B. Okay, we can see lower momentum wave, higher price, higher momentum wave, lower price. We come down to the 3-minute. What do we see? On the 3-minute, look at this. Same exact thing. We can see that as price is getting lower, we can see that momentum is getting higher in general, but then we have an anomaly right here. Okay, this is why the ninja entry is a little bit harder to do. What we need to do on the ninja entry is we need to average out everything that we're seeing and determine, is this a good trade or not? And if you don't take a trade and it goes your way anyway, you can't be disappointed. But we have to interpret the lower time frames through the lens of the higher time frames. The 1 hour is bearish, the 12-minute, the 6-minute are bullish, right? Now we're looking at the 3-minute. We need to determine what is happening with the money flow. We can see as price is coming down to our level, the money flow is getting higher and higher. It's getting thicker and thicker. We can see the blue waves are getting thicker. We can see the purple waves are getting thinner. This is showing us money is coming into the asset even though we're dumping. We come down to the 1-minute. What do we see on the 1-minute? Now, it's kind of hard to see it on the 1-minute here, But we do see, and this is why the ninja entry can be a little bit difficult to do, right? We can see that as price is coming down, in general, momentum is coming up. In general, it's difficult to see here, but you will get more experienced at it. Okay? And yes, we have the anomaly right at the bottom here. We have the anomaly right at the bottom. But if you see all these big BitBoy green dots, momentum getting higher, 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 we can see in general purple money flow getting lower, 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 coming up, 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 up. That is confirmation to enter. And I call this a ninja entry because you have to be very, very quick and certain about it in order to enter. Now, if you have the confidence to enter because you see that we're getting divergences on the 12-minute and down, and you're looking at the money flow and you're saying, okay, money flow's coming up, I'm going to go for it, then you can set your limit orders down here. Okay, but remember I said the ninja entry could be a limit or a market order, right? Now, if, let's say, for example, you don't, let's say, for example, you didn't take it, right? You didn't take it because you were scared, you didn't have your confirmations. Now you have two options. Either you can market order in after we get a clear reaction, right? After we get a clear reaction, so some people might see, okay, we're getting a bounce, and now that we're getting a bounce, I see money flow curving to the upside. I'm going to go to the 6-minute and see, okay, confirmation now. The green dot is printing on the 6-minute time frame. Where were we? Right here, right? Maybe you'll enter on confirmation when this dot is actually printing on the 6-minute and say, okay, this bullish divergence is confirmed. Then you can mark it in a little bit later. Now, obviously, the limit order is better, but the market order sometimes has to be done. Now, don't ever feel like you have to take a trade. That's another thing. If you are not confident, it's better to only wait for these trade setups, which will come less often, but they do come, right? It's better to enter a confident trade only than to not be certain on a ninja entry. Okay, the ninja entries, they're obviously higher risk, right? Because you don't have as much confirmation. We're going to get into risk management later, and risk management will actually help you be more confident entering your trades, okay? But if you have to enter a market order, then immediately what you do after you enter your market order is you need to, where are we now? Right here. You need to immediately set your take profits, right? You need to immediately set those take profits up at the point of control, move your stop loss to your entry, and set more take profits along the way up, okay? So, now I want to talk about the chickens drinking water trade strategy. The chickens drinking water trade strategy is basically where we are looking for price to come up above a previous wick and do it with a bearish divergence on the 1-minute time frame, all right? Now, we're not actually looking for a specific level. We're looking for a wick. So if we go to the 1-hour time frame, we can see here, and I'm going to make an entire video on this, right? But we can see here that we had a wick right here, okay? A wick right here. We mark that wick, and we say, look, if we are getting price pumping above that level with a 1-minute bearish divergence, I'm going to go ahead and enter a short, okay? I'm like I said, there's a whole video on this strategy, and I'm going to put it in the course. But for now, we just need to be aware that it's a different strategy. We're not going to be looking for divergent sweeps, really. We still can, because it's important, if you're going to take a chickens drinking water trade, that potentially the 1 hour is starting to top out, and the 24-minute is starting to top out, right? We do absolutely want to see them topping out, but we don't need to see divergences on them. We want to see them topping out, but we don't need to see divergences on them. Okay, that's the difference. So we want to say, as price is pumping above our wick, we come to the 1 hour, and we say, okay, it looks like it's about to print a red dot soon. We come to the 24-minute. Looks like it's about to print a red dot soon. Okay? Now, keep in mind, this red dot was not printing as we started to pump up here, right? Because the pump kept the red dot from being there. But, by the time we get down to the 12-minute, now we can see, okay, we've already printed a red dot on the 12-minute, and yet price is pumping like that. okay, if I see a bearish divergence on the 1 minute, I'm going to go ahead and take that chickens drinking water scalp. Now, on the 1 minute time frame, the trigger for our actual entry is always going to be, hang on, I have to find that, here we go. The trigger for the actual entry, guys, is always going to be that first red dot printing, okay? Don't front run it. Wait for that red dot to start printing on the 1 minute, and here's why. When you see that red dot starting to print on the 1 minute, and you see, the divergences forming on the 1 minute like this, okay? And there's two things that we want to look for a confirmed chicken drinking water trade setup. Number one, we want to see higher time frames topping out. Honestly, it could be anywhere from the 24 minute down. It doesn't have to be the hour and down. It could even be the 12 minute and down. We want to see some kind of top happening, some kind of local top happening. The second and most important thing is, as we see maybe the 12 minute, the 24 minute are topping out, that's where we want to go down to the lower time frame, the 1 minute. And for confirmation of a chicken's drinking water, we want to see money flow coming down and momentum waves coming down. And as soon as we break above that wick, if you see momentum and money flow coming down, you will enter on the first red dot as soon as it starts printing. Okay, as soon as it starts printing. Now notice something. It starts printing during this candle right here, okay? So we need to be quick to enter in here, right? We want to see pump above the level lost, red dot starts to print, boom. That's where we have to market order in, okay? It has to be very quick. You have to be there with the market order ready to go on your phone as soon as you see that red dot to get in. Do I sometimes front run it because I see money flow coming down? Yes. Sometimes I front run them, guys. But I will say I've gotten wrecked because I front run them. So now, unless you're really experienced and you see that money flow coming down, make sure you wait for that red dot to print. Okay, this is not financial advice. And for that, as soon as you mark it in, you're going to be setting your take profits. Set the first one at the value area high, maybe the second one back down at the golden pocket, and move that stop loss to the entry as soon as you get into your trade. Okay? So now we're going to talk about stop losses and risk management, because this is very, very important. Okay? You should not be risking more than 1% of your account per trade. Now, when people hear me say that, they think, wait, if I have $1,000, I can only put $10 on a trade? No. That's not what I mean. I mean, you can only risk 1%. So let's say we have $100,000 in our trading account, right? 1% of $100,000 equals $100. That means for every trade we take, if that trade is a horrible loss, even if it gets liquidated, we should not lose any more than $100. Now, there's so many ways to do this, okay? We could use 4x leverage and put $400,000 on a trade and have a 0.25% stop loss, okay? And only risk 1%, right? Because 0.25% of $400,000 is only $100, right? There's other ways to do it too. What I like to do, especially when I'm scalping, is I love to crank the leverage high, okay? Crank up the leverage really high and only risk 1%. So let's do it like this. If I had $100,000, right? And and for more information about this, check out my Bybit tutorial in the course as well, okay? Posting a Bybit tutorial. It's actually a YouTube video I have, but it is in the course under the risk management section. Okay, if I have $100,000 and I am using 50x leverage, for example, what does that mean? That means that now I have a total of, hang on, I'm going to get out my calculator so that I don't flop and grope here with the math. $100,000 times 50 means now I have $5 million at my disposal. Okay? So now, because I'm using 50x leverage, what this means is if I put 100% of my account on the trade, I'm risking all of my capital, $100,000. Okay? But if I put $50,000 on the trade, okay? $50,000 is 1% of 5 million. So here's how it works, right? If I have $100,000, I'm using 50x, and I put 100% of my account on the trade, Okay? Like, really pay attention to this because people don't understand this. If I have $100,000, I'm using 50x leverage, and I go into Bybit and I put 100% of my account onto the trade, and I'm getting 5 million contracts. My margin, and I'm talking about if we're using isolated, okay? And I recommend using isolated. My isolated margin on the trade equals $100,000. And this is because I'm putting my $100,000 up as collateral, and the exchange is loaning me 50 times more money than I have. Which means if price goes down enough where the exchange is in a danger of losing money, they're going to liquidate me and I'm going to lose all my $100,000. Now, if I am using 50x leverage, right? I have $100,000 and I'm using 50x leverage, and I'm putting 1% of my account on the trade. Now, guess what? I can put $50,000 on the trade. Okay, so with isolated margin, I could so if I had, in the first situation, if I had $100,000 and I use 50x leverage and I put 100% of my account in the trade, I'm putting $5 million on the trade, right? But my isolated margin is only risking me $100,000. Okay, it's only risking me $100,000 of my actual money. I'm not going to lose $5 million if I get liquidated. No, I'm going to lose $100,000, which happens to be all my money. But if I have $100,000 and I'm using 50x leverage and I put 1% of my account on the trade, now I have $50,000 on the trade. But my isolated margin that I'm actually risking is only $100. It's only $100, right? I get to put $50,000 on the trade and only risk $100 if I get liquidated. Okay? This allows us to use leverage in a way that will keep our risk low, but it will allow us to make a decent amount of money on the trade. Okay? And there's multiple ways to do this, right? Now, let's say we have $100,000 and we're using 50x leverage, right? And we put 5% of our account on the trade. Well, now, what that means is, instead of putting $50,000 on the trade, now we can put $250,000 on the trade, right? That's $250,000 on the trade if we're using 50x leverage and we risk 5% of our account. And just so you know, Bybit has a slider, right, on your phone or on the computer. How much do you want to put on? 1%, 5%, 10%, 50%? Whatever percent you choose, regardless of your leverage, you're still only risking that percent of your actual money. So if you have 100x leverage or 1x leverage and you slide that thing to 25%, if you have $100,000, regardless of whether you have 1x leverage or 100x leverage, you are only risking $25,000 of your account if you move that Bybit slider or Femex slider or Binance slider to 25%. I want people to really understand this. Regardless of your leverage, regardless of how many contracts you're putting on a trade, if you put that slider on Bybit to 25%, you are risking 25% of your actual money if you're using isolated margin, okay? Cross margin is always different. But if you're using isolated margin, it doesn't matter your leverage. It doesn't matter how many contracts you put on that trade. All that matters is what percent are you risking when you slide that slider to 10% and enter a trade. If you have 1x leverage and that trade gets liquidated, you just lost 10% of your account. If you have 100x leverage and that trade gets liquidated, you just lost 10% of your account. So this is what makes it so powerful, because we can leverage our trades to put a lot of money on an account. We could put 2.5x our whole account, right, and only be risking 5%. Now, if we risk 5%, right, of $100,000 with 50x leverage, we can put $250,000 on the trade. And if our stop loss equals negative 25%, which is a pretty loose stop loss, guys. It's a loose stop loss, especially if we're entering trades where we know that if we're wrong, it's going to be really wrong, right? When we're looking to scalp these levels, right? And for my Ethereum trades, they all hit perfectly yesterday. Look, it doesn't matter if I was using 100x or 1x leverage. I'm not getting liquidated on these trades, right? Because they all hit to pretty much the exact dollar, right? And so even if I'm limiting in and I'm in drawdown for a little bit, even if I have 70x leverage, I'm not going to get liquidated. If I have a negative 25% stop loss, I'm not going to get stopped out. That's the thing about scalping. You're so precise. You know what you're looking for. It's not like we're entering a swing trade thinking, I think it'll go up within the next day or two. No. We're like, I know it's going to go up in the next minute, and if it doesn't, I need to get the heck out of the trade, right? And so that's what we're doing here with the leverage. So what I like to do is I like to use 5% of my account on a trade. If I have $100,000, that means I can put $250,000 on the trade. If I put a 25% stop loss, if we do the math, that means I'm actually only risking, if I have $100,000 and I am timesing that by 0.05, that means I'm risking $5,000 of my trade, okay? Now, 25% of 5,000 is 1,250. So if I have 50x leverage, I put 5% of my account on a trade, I move my stop loss to negative 25%. If I get stopped out, my loss equals $1,250, which equals 1.25% of my whole account. Do you guys see how you can use leverage, even with a little bit of money, right? You can make so much money. I'm risking 1.25% of my account to potentially make, and if we take a look at the actual trades that I entered for Ethereum, let's go to a higher time frame here so that we don't get lost here. Okay, I have $250 on a trade, right? I'm risking, I have $100,000 altogether. I'm risking $1,250. And guess what happens? I just made on this trade right now, from that one trade, 10%, okay? I made 10%. That means I'm risking $1,250 to potentially make 10% is 0.1 to make $25,000, okay? I'm risking $1,250 to potentially make $25,000. Now, is every trade going to be this massive breakout? No, absolutely not. Absolutely not. Let's take a look at some of the other trades I made here, okay? So let's take a look at the first short that I made, right? A 2.7% move, okay? 2.5% move. Again, I'm risking about $1,000 to make 250,000 times 0.02. That's a 2% move. I just made $5,000, right? The risk to reward ratio is very high. I'm risking very little to potentially earn very, very much. Now, we also have to understand that we're taking partial profits out along the way. So is this actually a $5 move, $5,000 trade? No, it's probably more like maybe a $2,000 to $3,000 trade, okay? Because if we take 25% out early and move the stop loss to the entry, and then we take out another 25%, right? We're not making this full $5,000. Maybe we're making $2,000. Are you complaining about making money? Shouldn't be, right? We should be prioritizing not losing. Okay, now let's say, for example, that we get our scalp trade, right? And we hit our take profit one, we take 25% out. So that would basically be this, right? We come down to our first take profit, which would be, let's say, 0.78%, right? So 0.78% of 250,000 equals, we just made $2,000. Divide that by 4. We just took out $487, locked in that profit into our account. We move the stop loss to entry. Now, what happens if we move the stop loss to the entry and we get stopped out? It means we're going to get stopped out and we're going to have to pay a market fee on the remaining $15,000 that we had left, okay? So that's times point. So we have to pay a $37 fee, or maybe I'm wrong. Maybe it's times times 0.0 is 0.025%. So yeah, we move the decimal. Yep, 0.25%. Yeah, that means we're paying $37 on that market fee. So we're still getting out of that trade with like $300, right? It's still a profitable trade. So that's what's so good about moving your stop loss to the entry after taking a small amount of the trade out. You're still going to end up in some profit. Okay, you're not going to lose money. Okay, and let's say now that we do end up taking multiple losses in a row, and we lose $2,500. Okay, we lose $2,500. Bummer, right? But then the next trade that we win, we're going to make that back, right? If we lose 2 trades in a row and then we get a 3% move, right? We already did the math. Even though we're not going to be taking $250,000 times 0.03, which is a typical scalp, right? 3%. 2 or 3%, you're making, $750,000. And let's say because you're taking partial profits, you're only making $3,500. Okay, so you lost $2,500, you made $3,500. You're $1,000 in profit for the day after taking 2 losses and 1 win. Okay? This is how we're going to deal with our risk management, our stop losses. And if you know that you're using good risk management, and if you get absolutely wrecked, right, you're not going to be set back. It takes all the pressure off. You are going to feel no pressure at all when it comes to entering a trade. Because you're like, hey, I could take this loss, I could take the next loss and the next loss, but that third trade is going to set me back to at least break even, maybe even some profit, right? And because we have a plan, because we did our technical analysis in the beginning of the day, and we know exactly what levels we're looking for and exactly what confirmations we're looking for, because we're only entering a trade if it comes to our level and fits our plan and we have our confirmations on Market Cipher, that means the trades we enter have a very high probability of being good. If you, let's say, for example, you're a newer trader and these 2 entries scare you and you only want to scalp with divergence suites, I would say that divergence suite has like a 95% win rate. If you have a strategy with a 90% win rate and you are using this type of risk management, right? And of course, you don't have to use 50x if you're concerned. You could use 20x, you could use 10x, you could use 1x. Okay? But my point here is, if you have a very high win rate and very good risk management, it's very unlikely that you will lose unless you deviate from this plan and this structure. In fact, I will say that the best traders I know are the traders that do not deviate from their plan. They do not deviate. Okay, deviation from your plan will get you wrecked. Revenge trading will get you wrecked. FOMO trading will get you wrecked. Calm, cool, collected trading with a clear plan for the day, saying I'm only going to enter a trade if price gets to my level and if I see my confirmations on Market Cipher. I'm going to make sure I don't risk more than 1 to 2% of my account per trade. I'm going to make sure that I lock in profits early and move my stop loss to my entry to prevent losses. If you do those things, guys, this is something that you can do. You can do it full time. And maybe you don't have $100,000 of capital. Maybe you only have $10,000. Okay, well then instead of making $7,000 per trade, you're making $700 per trade, $500, $200 per trade. This is something that, and here's another thing. If you only have, $1,000, now you're making $70, $20 per trade. You can just let your account grow and grow and grow until you have the 10 grand, until you have the 100 grand. And if you stick to this strategy, you will grow your account. You will. You absolutely will. I guarantee sticking to this, sticking to the mindset is going to be the hardest thing you do. Discipline and patience to do this is going to make or break you, because anybody can look at a chart and pull a fib and draw a line. But it takes something from within you to say, I am going to stick to this even though everything within me wants to FOMO trade and gamble. I'm going to stick to my discipline and my patience and my strategy. That is going to make or break you. All right? That's it for this scalping session, guys. I hope you found it helpful. Okay? I hope you found it helpful. God bless, and I'll see you in the next session. Peace.